Welcome to another episode of the Discuss segment of the Market Opening Gong, where we provide incisive information and engage in robust discussions on investments for millennials. Today, we would be looking at millennials' interest and participation in Fintech Investments. With me to discuss on this topic is Mr. Felix Imafidon, Chief Executive Officer of reQuid Technologies, a member of the Securities and Exchange Commission Fintech Roadmap Committee, and also a strategic partner to the Nigerian Stock Exchange on their growth board. Mr. Felix Imafidon, thank you so much for coming on the program today. It's great to have you with us.
Yeah, I'm glad to be here as well. Thanks for having me.
Okay, so you have gone from winning the first ever hackathon organized by the Nigerian Stock Exchange in 2019 to driving technology vision and operations through leveraging existing technology and innovating new technologies in addition to the launch of new features at reQuid that would attract the attention of millennials and give them a seamless digital experience. First, I would like you to demystify the concept of agro investments for individuals that have no idea and would like to know.
All right. So thank you for that. So agro investments generally, like you hear from a lot of people that the future of Nigeria is going back to where we were before, where we used to generate a lot of revenue, a lot of forex from farming, as it were. So what we've seen in the last couple of years is some people have come together and they thought that why not democratize farming? So if people can't put in the effort into farming, how about they can bring their funds for those people who are willing to put in the effort, right, into farming? So you've seen platforms like FarmCrowdy, Tribe Agree, platforms like that. So what they've done is they are saying that there are people who have the funds, right, willing to lend that funds to the farmers. Lots of those farmers who are out there, and these farmers either do not have funds, or that's access to capital generally, or do not have access to more recent, more optimized input for the farming process. So what these companies have done successfully is to kind of create a bridge for that gap. Right. So today, I can sit in my house. I'm not a farmer, right? But I'm supporting a farmer in Sokoto State with my income. And then knowing that whatever proceeds that farmer has at the end of the farming season, I have a share in that proceeds. So you hear things like if you sponsor a farmer with a certain amount of money over a span of maybe 6 months, the company is willing to share the farmer's proceeds and give you maybe 15%, for example, right? So pretty much that's what we've been seeing in the last couple of years. And, a lot of things have been happening in that regard. And the beauty of it is young people who are probably not interested in farming can be interested in funding the farmers.
Okay. All right. So I mentioned earlier that, reQuid won the NSC hackathon. What was it like winning and thereafter building reQuid Technologies in terms of product development and value creation?
Okay. So last year, sometime I think around October last year, reQuid participated in a hackathon that was organized by the Nigerian Stock Exchange. So the goal of that hackathon was to identify companies like ours that were, driving millennial participation in the capital market. And for us, when we put in to participate in that hackathon, the whole idea was we wanted to, aside all the other benefits that the hackathon had, we were also looking for a bit of validation, And interestingly, I can say that the market already validated what we had. So what we're doing at reQuid essentially is we're creating some kind of marketplace where we aggregate all the different farm funding opportunities that are out there, what people call crowdfunding investments that are out there. But very critically, we noticed that with with the advent of crowdfunding in the last, say, 3, maybe 4 years, what we've seen is that a lot of companies are coming into that space to participate in that space, right? Where you say, give us your funds, we're going to engage in X, Y, Z, and over this span of time, we give you these returns. And what we've noticed in the last year that we've been doing this is there are a lot, while there are, credible institutions out there who are doing this and, creating, galvanizing a lot of, doing a lot of work, in this regard, there's still a lot that are out there that are just structured to defraud people of that hard-earned income, one. Two, there are others that, they didn't come out to defraud people, but however, because of the kind of structure that they have, right, they're either making some kind of losses or their business is not structured enough to be able to do what they promised to do. And then they're failing on their promise to deliver. So what we've done with reQuid successfully is we created some kind of risk assessment framework with which we are objectively and numerically measuring the risk involved in participating in all these agri investments and the like, right? And then based on the benchmark, we determine how safe it is for investors to participate in investing in any of this company, right? So when we put in for the Nigerian Stock Exchange hackathon, one of the things we wanted to do was to, at that point, we were actually at the point of validating the product itself. And like you already said, we won the hackathon and we're recognized as one fintech startup that is doing some kind of work in increasing the participation of millennials. And it's been interesting in the last 7 months approximately that we launched launched the product to the public. In H1 this year, we've hit over 1 billion in transactions. You're seeing a lot of users, mostly millennials, who are participating more in investing.
Okay. So what do you really think can be done to boost millennial participation, especially leveraging technology, leveraging technology? Because, from really stories that our parents have really said and people, investment experts that have, been in that space for over 25 years, back then they really had to go to the trading floors to see their stockbrokers to really know what's going on. But now with the advent of technology, from your digital device, you can really just make an investment. So how important is that really to drive that needed millennial participation?
Okay, so what we've noticed with millennials is that they want the message crafted very simply, right? I remember when I started investing, my first investments were mostly, at least in the financial and capital markets, were mostly in very simple things like treasury bills. So the communication of a treasury bill is, if you invest, if you buy a bill, which is investment, right? Say $1 million worth of a 360-day treasury bill. After 1 year, you will get, I don't want to see all the technical jargons, but the point is, after 1 year, maybe you're getting 12%. Probably that's what the value was maybe 2 years ago, right? Right. So for me then, the message was kind of simple. So it made sense for me to, begin with treasury bills. Before I got into the stock market, the message in the stock market it wasn't crafted right. It took me engaging with friends who were either a stockbroker or people who were, interested in the stock market to understand how the activities in the stock market worked. So, point being that, we're in an age where the average millennial does not have the time to do his research, understand all the dynamics around investing in any product. What they just want to hear is simple messages like, oh, give me this, after this period, you get this, which is why the likes of MMM and all of those Ponzi kind of structured schemes have had a lot of millennial participation as well, right? Because they just latched on simple communication, right? Invest this over this period, you get this. Of course, we can't say the same for the stock market because maybe the stock market is not exactly structured that way, right? It's not invest this, you get it. You're actually investing in a company with the hopes that the company is profitable enough to either pay you dividends or the value of that dividends increases and you can sell maybe over a period or whatever that is. So for millennials, I'd say, which is one of the things that we're doing, a lot of education as to how participation in the capital market works, and then trying to see how, even for existing products in the capital market, how we can recraft the message, educate the millennial so that he understands exactly what the product is. And they also, very importantly, provide a platform that is seamless for him to use. So from seeing the product, understanding the product, investing in the product, making payments for the product, and then probably monitoring all the things that happen around that investment until maturity, as the case may be. So that whole seamless, the ability for the millennial to seamlessly participate and carry out those actions is also very critical for us to increase millennial participation in both the financial and capital markets.
So we can't really speak about investments without talking about risk. For an investor, how can they truly measure the risk in investing in agrotech to make informed decisions as to whether they want to invest in that vehicle or not? Because every individual's risk capabilities, they are quite different. So if you can just shed more light on that.
The core of our business lies on the promise that when you see a product on our platform, we have done the due diligence required to determine whether the product, is safe. Of course, like you said, different people with different risk appetites. In this last 1 year, we have seen a lot in the market. You see platforms that tell you, we'll give you 12% in 2 months, give you 5% in 1 month, as the case may be. And like it's generally said, the higher the risk involved in an investment product, also the higher the reward. In a lot of cases, though, the higher the risk, the more likely you may not even get the reward at all, right? So for us, it was quite some work to design the risk assessment framework that we are using currently to onboard the partners that we work with at the moment at reQuid, from understanding the company itself, right? What kind of structures do they have in place? What kind of company is this? Determining what their asset base is, right? Also looking at the people who are the key drivers, from probably the board, management, having an understanding of what they've done before in the past, what's their credit rating like, what for the company, and then even for the people who are behind the company, to going as far as verifying whatever claims, depending on how the business is structured. So if you say, for example, you have a rice farm in Kebbi State, right? We want to see the rice farm. We want to understand what exactly is happening there. Who are the people that work there? What's the risk exposure? Are the farmers comfortable with what they're doing in that farm? What's the ownership structure like? Who owns the farm? Is there a lease arrangement? The land on which that farming is happening, who owns it? Is that an embargo on the land? So there's a whole lot of work in determining the risk value, right, associated with a particular farming cycle or a farming business or an agribusiness, as it were, even so as far as going to the insurance company, verifying insurance, understanding the fine print of the insurance. If something like X, there's a fire tomorrow, what does the insurance paper say, right? Will the insurance do something about it, or is there something that they could latch on to say, okay, maybe this is your fault, or it's an act of God, blah, blah, blah. So the point is, there's a lot that we look at when we're trying to assessing the level of risk involved in investing in a certain farm, right? And for us, that's the core of our business. Understanding that risk and ensuring that if we're going to bring on board a partner on our platform, we're certain that the risk exposure to the investor is as minimal as possible.
All right. So there have been cases of investment scams, like when people really want to invest. Narrowing it down to agrotech, what strategies should be adopted to prevent these young individuals from falling victims?
One of the things we always try to do is to educate investors, right? You need to understand the risk involved in any investment that you want to get into, whether it's stock market, agri investment, a bond by maybe a state government, or whatever, right? I think at the end of the day, it boils down to, it is important that whatever you're putting your money in, you understand how that business, right, or how that product works. So for example, why would I invest in a bank stock if I don't understand how the banking industry works? Why is that information important? It's important because if there's news tomorrow that so for example, earlier this year, the rating for our financial sector for banks, right, in Nigeria was dropped by a rating agency, right? So when I see that piece of news, the question I ask myself as someone who is invested in XYZ bank is, how does this change? How does this information, how does it impact the value of my stock in this XYZ bank, right? So if I understand, if it's a sector I understand, the banking sector, I understand all the dynamics, maybe not everything, but to some extent I should be able to tell that, oh, there's coronavirus right now, and this is how coronavirus could impact the value of my stock in so-so bank, right? So point is, they'll always tell you, if you don't understand any business, don't invest your money in it. So if you don't understand, for example, how farming works or how commodities trading works, maybe you shouldn't invest in, agri. If you don't understand food, right? So for example, let me give you an instance. When the whole COVID-19 started, it began to get a bit of more traction in Nigeria. We had to, at reQuid, we had to do a review, of our processes. We had to do a review of all of that and see, how does this impact? How is it going to impact our investors who are invested already? How would it impact the partners that we're working with? Would they be able to fulfill their obligation to investors, right? Will people eat more? Would there be more higher demand for food? Or would there be a drop? Would there be some kind of dip in the demand for food? Will the price of food increase, or will the price of food decrease, right? So we have to look at all of these things. And then when we did a review, we saw that, the impact of coronavirus on the agri sector, very much more likely that there will be some kind of increase. So for example, in the last couple of months, the demand for food, consumption of food in Nigeria has kind of increased a little bit significantly. So because I understand that, I know that investing in agri, is something that makes sense to do. So at the end of the day, it just boils down to, as a millennial, invest in something you're interested in.
What is the role of regulators in really developing policies to regulate the agrotech investment space?
It's a good thing that the regulator, they've seen this sector and they're actually doing a lot. Sometime early in the year or last year, if I'm correct, the SEC released a crowdfunding rule draft, right? So a set of policies that will determine how players that are playing in the crowdfunding sector, both agribusinesses and allied other businesses who depend on the crowd to raise funds, how that dynamics is going to work, from doing due diligence on parties, the crowdfunding businesses, to carrying out KYC on investors, to understanding how the operational dynamics and all of that, right? So yes, what's the role of the regulator in this? So first off, the role of the regulator would be, first of all, understanding this, sector, understanding the market, how the players come together in the marketplace, and how the relationship is, and then determining how best, which is what the SEC is already doing, how best to protect the person who is bringing his money, because that's pretty much, at the end of the day, all of this boils down to how do we protect investors, right? So yes, creating policies that protects the investors, very critical. Secondly, also determining how best, to provide an easy way for investors to exit the market when they need to. And I know the SEC is already doing some work around that. So for example, reQuid has a secondary market, right, that creates liquidity for agri-structured investment. So before now, if you invested in a farm, what happens today is that your investment, say it's a 6-month investment, you invest today, you're expecting your funds in 6 months' time. 3 months down the line, you have an emergency, you need your money. As at before reQuid started, it was impossible for you to get your money out of it because you have to wait till maturity before you can get your funds, right? So one of the things that we identified and saw was that there was need for liquidity. Liquidity means I invest in something and then I need my funds tomorrow. how do I get my funds out? So we created a secondary market that allow people to, sell their investments and exit when they want to do that. So yes, maybe that's another thing that the SEC should be looking at. How do we create some kind of easy exit for investors as well? Also, for businesses who are raising funds from the crowd, how do we control? So all of this just boils down to policies that will govern how all the in that space in such a way that the investor is protected, the businesses can easily raise funds, safely raise funds at some kind of fair enough cost for them, and then also, so point is protect all the players on all the fronts that are important to them.
Okay, so I hear you when you say like it's very critical for the regulators, to work around developing some policies that would protect the investors, because for one thing, young people really want to know that their investments are safe and secure. In your recent feature launch of your product, it was with Uncle Pamela. He's really, very active, one of the really active influencers that we have on Twitter. And I personally think that it's essential for both the operators, both the regulators to, really use that social media platform to be able to better communicate with these young people that spend most of their time on there.
The regulators should do a bit more work around investor education, connecting with the players that are in the space. That one of the things that will do is it will give the investor some kind of comfort that the regulator is, is aware of some of the things that are happening and they're doing more to protect their interest.
So I know you personally like to mentor a lot of young people. It's something that you're really passionate about. So on that final note, what would be your advice to millennials on investing and creating wealth?
Maybe I should share a bit of my my investment journey.
Please do.
I started my first company when I was somewhere around 18.
Wow.
Registered with the Corporate Affairs Commission. Sorry, Corporate Affairs Commission. And then, I started doing business. I was doing a bit of software consulting, developing ERPs for companies at the time. And then scroll back to somewhere around 8, 10 years after, I'd made some, maybe not so big, some funds, but I'd made some very good income, And then I was looking back to, one day I was just looking at my bank statement and I was running through, some of the inflows that had come in. And I realized that I couldn't really place my fingers on, where these monies, of course, maybe I could see a few things here and there, but I couldn't tell myself that, oh, so this is how much you have made, for this number of years, and tell myself probably these are some of the assets that I have, or these are some of the places where the monies are, right?
Right.
As a millennial, right? At this point, the best time to invest. No, they will tell you the best time to plant the tree is, probably the best time to try it again is now. So point being that as a millennial, you need to start to learn the art of investing as early as possible, right? So that's free cash you just got from somebody, or that job that you did somewhere, you got some money. You need to learn the art of saving it, right? And probably even much better, investing it. And as much as you can also, it's important that you learn how to diversify. Maybe this is not a platform to, have to say all of these things. But summary is, it's critical to save very consistently. So if it's 10% of your income, 20% of your income, you're a crazy person, like some people I know that want to do 50% of their income, of course, that's dependent on how much you earn and how much you spend as well. The point is, whatever you're doing, be consistent. And beyond saving, you need to learn how to invest. Why is that critical? So the Nigerian environment is a high inflation environment. Inflation today is around 12.4%, at least for May 2020. What that means is when you've earned *1 million naira, for example, right? By the 12 points, if you earned *1 million naira last year, right? This time last year, by the 12.4% inflation value, it means that 1 million naira is worth just about 87.6%. So so if you could buy a car of 1 million naira last year with your 1 million naira, today you won't be able to buy that car again at that same rate, right? It will have gone up by some, just to make the math simple, 12.4%, right? So because we have a high inflation kind of environment, it's important to look for investment vehicles that will give you at least your 12.4% inflation, so that you get your money, you retain your funds or your income at the value that they were last year, right? Which is one of the things that reQuid is doing, providing that marketplace that gives you access to some good returns on investments on investment products.
I really hear you when you say that, you started your first company at age 18, and personal experiences like this would, really help to motivate a lot of other young people that are still trying to decide whether to really go into this financial market space and to, really invest. Because honestly, that demography is really low. Their participation is really low in the capital market, and I'm sure the capital market is really waiting to engage them. Mr. Felix Imafidon, thank you so much for being with us on the program. It was great having you to discuss and gain insights on the subject matter.
Yeah, thank you very much.
Yeah. We look forward to having you join us on the program again. And that will be all for this discuss on today's edition. Do connect with us on our social media platforms showing on your screen, and be sure to visit our website, www.proshareng.com, to get more updates on our news stories and videos. Until next time, thank you for watching, and do stay safe.